All right, welcome back everybody. Welcome back Altcoin Daily team. If you're new here, feel free to subscribe because we come at you every day breaking things down, exactly what you need to know regarding what's going on with Bitcoin and crypto today. The IRS has finally released new guidance on cryptocurrency tax treatment. It's a mixed bag with one very bad consequence. In today's video, we're going to go over the good, the bad, the ugly. Basically, we're going to break things down so you have a better understanding exactly what the IRS expects from you. So let's start with the good, because the IRS has done good with two specific things. And once you understand both of these clarifications, I think you're going to appreciate it a lot. First one, fair market value and basis has been cleared up. So basis, I believe, is the amount that you initially paid for your cryptocurrency. Taxpayers now have generally clear guidance on how to determine the basis for cryptocurrency they've purchased or otherwise received. Depending on whether it's acquired on an exchange or through peer-to-peer transactions on the blockchain, basis will be the amount you spent to acquire the cryptocurrency, the quoted price on the exchange, or the fair market value as reported on the index. It seems very simple. I agree, but the fact that the IRS has cleared up this common sense thing is a step in the right direction. Now, this next good clarification, it's even better. Check this out. Accounting standards are now clarified. Taxpayers can use specific identification or first in, first out accounting in order to calculate their gains or losses. So what this means is, for instance, in the United States, you have to hold on to your Bitcoin or crypto for over a year so you have a less capital gains tax. Well, when you go to sell, how do you determine that the Bitcoin you're selling is that Bitcoin that you initially bought over a year ago? Because you bought some more Bitcoin last week, right? With this clarification, first in, first out, that means that what you are selling, what's going out, it's just going to be assumed that what you're selling is first in, and then you'll pay a lesser tax in capital gains. So this is obviously another great thing. Well, those two were the good things. Let's get to the bad. This is the main one. Any hard forks with new coins, i.e. Bitcoin Cash, Ethereum Classic, any airdrops, will create an income event for taxpayers. The new guidance suggests that a taxpayer will have a taxable income in the moment that new coins from a hard fork are recorded on the newly forked blockchain or airdrop. That means that anyone who forks a blockchain can, without warning or notice, create new tax obligations for every holder of coins on the old chain. Same goes for airdrops. Anytime somebody airdrops a coin to an address over which you have dominion and control, they create a tax reporting obligation on your part. This is obviously a very bad thing. There's all sorts of issues. There's all sorts of, it opens up a whole can of worms. For instance, what if you have no idea that the fork even happened? It's like owing income tax when somebody buries a gold bar on your property, but they don't tell you about it. It's absurd and it's impossible to reasonably comply. What else? First of all, there's all sorts of like weird incentives now. So maybe taxpayers have an incentive to keep their coins on exchanges now and never hold their own keys, because that way they won't face unwanted tax reporting obligations, because according to the guidance, a hard fork or airdrop is not an income event for people who hold their coins on exchanges until and if the exchange supports the new chain and credits their account. So for ease of use, we could see a whole group of people just keeping their coins on exchanges, which is obviously not ideal. Now, besides that, I actually think this is going to incentivize people, or actually disincentivize people to actually hold on to certain altcoins. For instance, EOS. EOS was one. I thought a big draw to EOS, especially back in the day, was that on EOS, unlike Ethereum, which does ICOs, EOS will just airdrop coins to everybody who holds EOS. And the more EOS that you hold, the more coins you get in airdrops. Now, obviously, a lot of people just sell those coins immediately to get more EOS or Bitcoin or whatever they like. But I think if you live in the US, this is going to disincentivize people from holding on to EOS, because there's going to just be so many airdrops. And really, this is going to probably make a lot of people just narrow their portfolio down into the coins, only coins that they care about. Another issue is that, well, what if a bad actor, what if like Craig Wright or Roger Ver wanted to F people over on the main chain? So they're going to fork Bitcoin, but they're going to make the fork specific, so only certain wallet addresses, get the airdrops or the dividends or the new coins, and then those people would be responsible for maybe major tax implications. It's a whole slew of things. There's a lot more work to be done, but these two good things I think are very good. The bad thing I think is pretty bad. Is there anything else to say on this matter? Another problem was that hard fork and airdrop terminology is used incorrectly. It was almost interchangeable in their eyes, and there's a lot more work to be done. But anyways, let's move on. I want to talk to you about now the SEC rejecting the Bitwise proposal. Before we get to that, I do want to take 60 seconds and thank the sponsor for today's video, Credits.com. Credits is an innovative, lightning-fast blockchain for decentralized applications, an open-source, fully decentralized blockchain software protocol with smart contracts aimed at the creation of high-performance applications. Taking a look at Credits on CoinMarketCap.com, Credits is CS. It is ranked 177 as far as market cap goes, which I guess that would mean it's a mid to low cap coin. I mean, it's nowhere near the bottom. Out of 3,000 coins, its market cap is 177, or it's ranked 177. Right now, Credits is trading just under 9 cents. It's up 5% today, which is what I like to see. You can see it hit the markets in March of 2018 with an all-time high of about 82 cents. It is nowhere near all-time highs, just like the whole market. But it is also, from what I can see, nowhere near all-time lows. Well, at least off the bottom. It seemed to have bottomed early summer of this year around 5 cents, and it rallied with Bitcoin into late summer. Actually, it peaked not too long ago at 13 cents, a little bit of a pullback right now. So if you're bullish on Credits and wanted to pick some Credits up, I would recommend, well, the most liquidity is LBank and Coinbean. Then there's CoinTiger, but the exchanges I have used are Gate.io and KuCoin. So check this out. Link to Credits is in the description. We thank them for the sponsor. Moving on, SEC rejects Bitwise's latest Bitcoin ETF proposal. So I have some information on this I'm going to show you, but let's check out the story. The U.S. Securities and Exchange Commission, the SEC, has rejected the latest attempt at creating a Bitcoin exchange-traded fund. The SEC announced Wednesday that the ETF proposal by Bitwise in conjunction with NYSE Arca did not meet legal requirements. Really, the main problems is market manipulation and illicit activities. So to date, the SEC has rejected all Bitcoin ETF proposals, citing market manipulation and fraudulent activity concerns for all of them. What's interesting is that, so all of them are rejected now. We're not really seeing any more ETF proposals come to light. Jake Chervinsky, who is a lawyer, but not your lawyer, he had some insight on this. He said, at this point, it's reasonable to assume that Jay Clayton's SEC will never approve a Bitcoin ETF. His term ends on June 5th, 2021, but could go another 18 months longer. Usually, we'd see new ETF proposals filed immediately after the rejection, but it might be time to take a year off. So that's interesting. Now, of course, we all agree Bitcoin doesn't need an ETF to survive. It didn't affect the price at all. I'll go over the price in a second. But to finish this up, Bitwise tried to reassure the regulators that issues relating to market manipulation and fraudulent activity could be addressed, publishing a number of reports on what it saw as real Bitcoin market, the real volume, the real transactions, and showing that market activity correlated tightly with the regulated Bitcoin futures market, but obviously it had no avail. Before we take a look at price and end the video, I want to remind you of one thing. I know it's easy to get scared, but keep this in mind. Bitcoin has had a long 10, almost 11-year history. Take a look at the green versus the red. Bitcoin has been profitable to buy and hold 91.9% of the time versus the US dollar. That's 3,071 days out of 3,340 days that it has been in the green and people have profited. Remember, most distractions come from those that want your Bitcoin. And so obviously the caveat is a lot of people bought in the red, a lot of people bought in the euphoria near the top. But so far, if you hold long enough, you are in profit. And if you believe in Bitcoin's fundamentals like I do, I say that 10 years is just the start. But going from long term to short term, we actually see that Bitcoin rallied up yesterday. going from around 8,140 all the way to peaked at about, it wicked at 8,700. Now, we're on the hour chart, but this purple line right here represents the 200-day moving average we broke below within the last week. And the 200-day moving average, let's switch to the day chart, has been pretty significant throughout Bitcoin's history. And, you know, maybe a bullish scenario is us popping up. You can see on the day chart we actually closed below the 200-day moving average, so we just have that wick. Hopefully, in the next weeks to months, we go above it, and then maybe this will be seen as a time when this was the best buy for Bitcoin. The time, oh my God, people are going to wish they got in under the 200-day moving average in the future, is what I think. Anyways, that is it for me, my friends. My name is Aaron at Altcoin Daily. Like the video. See you tomorrow.